What's up? What's up? It's Eric Haas with the Haas Group at Douglas Elliman in sunny Southern California. Hope you guys are doing great tonight. And adapting to all these crazy changes that we've all been experiencing in the last few weeks. I know it hasn't been easy for any of us. I know now we're especially isolated, keeping that 6 feet distance, and a lot of us are working from home. If we're fortunate enough to have a job, I know my wife is about 15 feet away from me with her desk all set up. She works in the financial, so she's really keeping busy no matter what, because she's got clients calling in 2 or 3 times a day, changing their minds right and left. So, it's a crazy time for all of us, and, I hope everyone's taking care of themselves and staying healthy, but my hat goes off to everybody who's facing those problems and times of hardship. I know that a lot of people are going through unemployment right now too. That's impacting us a lot, but these are uncharted waters that we're all facing, and we're all facing them together. I'm not immune either. I don't think anyone is at this point in time. And, we're really just starting to see what the epidemic is really going to do, not only to our economy, but to our real estate markets, our businesses, and just life in general. I want to keep you prepared for what's going to be coming, because this is temporary. It's hell right now. I know we're all getting a little bit of stir crazy. I actually snuck out to In-N-Out, but went through the drive-thru, kept it safe. But we're getting a little stir crazy, and I get it. So we got to keep informed so that when normalcy starts to presenting itself again, we can make sure we're in the right spot, the right time to take advantage of it if we're looking to do something. So without further ado, let's hop into what's going on. Please make sure you subscribe and comment below. I'd love to know exactly what you're feeling and going through. Just give me a little like and hit that bell for automatic notifications. So we all know the stock market's crazy. We all know that it's just been volatile like nobody's business. We've had a little bit of an up and then right back down again. Not sure if the stimulus package is going to really be the all-saving factor that it's been proposed to be, but I really hope that it helps most people. Me myself, it's not coming for me, unfortunately, but I really hope people spend it wisely too. This is not a time to get the check in the mail and feel like, gosh, you know what, I can get that big screen, or I can get that PlayStation, for the kids, their home. This is a time to really make sure that you're really conscious of your bills, managing your money, maybe a spreadsheet even, just so you're completely aware of where all your money's going right now. Because again, as I mentioned, a lot of people are facing unemployment right now. And that's another topic we're going to get into as well. But with the stimulus package, I think it's going to be a positive, but I hope it's going to be used wisely. Let's put it that way. The end result is still completely uncertain until those checks start, being sent out. But, it's trillions of dollars being sent out. So, it's a move in the right direction. And I really hope that, normalcy can get back to where we were once before as well. Moving forward, it's crazy though. Even in this market, the US dollar has had an appreciation of 12%. And you're thinking, geez, how the heck is that even possible? But it is right now. And that's just proof in the pudding right now. But this gives opportunity to a lot of investors. A lot of people who are thinking maybe, I might invest in another market and reap a benefit and then pull my money back out and bring it back, when things get stable and more predictable again. But such markets that are facing this are 3 in particular. And I bet you there's one, which I'm going to save for last, that you probably are not even thinking about and will be completely shocked about as well when I share it with you. But stay tuned. The first 2 are actually really close by to each other. It's New Zealand and Australia. Both of them are facing 5-year lows with their currency to the point of a 20 to 22% decrease in valuation compared to the US dollar. A lot of people are taking note of that. A lot of people are thinking about doing business with companies there too, because the dollar is going to be so prevalent with respects to the Australian dollar as we speak right in point at this time. Now the other third one, which will shock you, is actually in the UK. The pound is actually experiencing a 25% decrease in value right now. And this is something that has not been experienced by the Great Britain since 1985. So this is major. Now, purchasing there is going to help you if you're looking to invest, but it's going to be more along the lines of, let's say, the $5, $10, $20 million properties that are going to really be the types of opportunities you're really going to see a benefit with respects to this inequality with respects to currencies as we speak right now. Is everyone going to jump in, ready to take your money across the pond and dump it into the UK? Probably not. But there are a few of us out there that are probably looking to do so. Just be prepared. Be smart. Don't take the risk if it's not something that you're totally 100% convinced it's going to be a positive ending. Now let's move forward. Another major impactor is unemployment. And we saw this coming. With everything closing up, businesses, brick and mortar shutting down, it's really all about delivery, maybe a drive through, but really everything's come to a halt. The malls are closed. I mean, we even got Neiman Marcus having conversation about bankruptcy. This is major, folks. This is not something that's going to be fixed in 6 to 12 months. Normalcy is going to take some time to get back on its feet, and especially with respects to employment. Unemployment has skyrocketed. I mean, we were having such a fantastic run under our current president, especially with the economy, and that's all been erased basically by this current epidemic that we're all facing. Now, the current unemployment application rate is at 3.3 million. The really sad thing about that is that's just the tip of the iceberg. There are reports, there's articles, briefings suggesting that there might be a 10-time increase. Yeah, 10 times. That takes us to 30 million Americans unemployed. If you think about it, there's only 100 million people in the workforce. That's almost a third of our workforce being unemployed. Now, that number can be impacted even further by the unaccounted. Now, what do I mean by that? Well, these are people who are still being paid on leave of absence, they're temporarily laid off, or they're jobless, but they don't know they're jobless yet. So there's a lot of people that are still kind of up in the air as to whether they're going to be applicants, and further adding to that statistic that has been a statistic that we haven't seen in probably decades. I haven't been around too long, but probably decades. Are we going to see a recession? Well, we've got a stimulus bill going out, as I mentioned. That's a great thing. And I'm, again, hoping people spend it wisely. But, human tendency is, hey, we get a little extra money, maybe we splurge a little here or there. Seriously, on a serious note, this is not the time to do such a thing. This is the time to be smart. This is the time to make sure that your money is where you can access it easily and have no issues. So maybe it's not the right time to buy that big screen or buy that particular stock. Maybe it's more important to stay on the sideline, kind of see how things play out. Again, this is completely 100% temporary. Bear that in mind, because change is going to happen. It's going to be a really interesting change once we get back to a normal way of living that we're all accustomed to living every single day. Now, with respects to the recession, again, it is a chaotic time, but it's not because of the economy. And that was a major impacting factor in 2008 and 2009. We had an economy that was just on the brink of recession, which it was recession. And right now, especially with the housing market, and if you live on the west side in Los Angeles, California, we've had tremendous increase in our values, especially our median values. And we still haven't seen any great degree of decrease as of yet. However, I know that that's coming. We'll get into that a little bit further in the video. As far as foreclosures and the pre-foreclosure market goes, I don't think that, we're going to get in that type of situation. Lenders are going to be a little bit more forgiving as well. So that's going to put homeowners a little less stressed out with respects to having to pay the monthly payment every single month. You will be paying it at the end of the day, but there's going to be some abatement to alleviate a little bit of stress. Be smart with the money. Be smart about how you're spending it. We're not going to have a foreclosure, pre-foreclosure short sale market, which is great, but bear in mind, we got to be smart at the same time. Now, the market in LA, it's still quite uncertain. We don't have any stats, we don't have any numbers to suggest a decrease quite yet. However, California Association of Realtors is projecting that the second quarter, which we're just about to dive into come April, is going to be the time that we're going to see the decrease in value. And the decrease in value that they are projecting, high single digits. So it's not crazy decrease, especially at least in LA. Not all neighborhoods are equal. I know my friends up in Calgary are experiencing something radically different. They've already been under a 5-year recession, and this coronavirus couldn't come at a worse time. We could say that, gosh, everything sucks right now, but hey, you know what? We could be in a far worse situation. There are people, countries, locations that are having it far worse. So be grateful for what you do have. Be grateful that our equity is where we are, pretty much putting us all in a positive situation with respects to our homes, which is a great thing. Here's another interesting aspect about the market that, we're starting to see as well. A lot of homes with buyers and sellers that are under contract have now been given this new addendum with the coronavirus, which is allowing for sellers and buyers to basically breach the contract or cancel the contract without any repercussions. That's good and bad. Obviously, we know that, you can't foresee something like this, and buyers may be having their down payments locked up in the stock market. And we obviously know that's taken a dumper for sure. We also have sellers who might just become uncertain about whether or not they want to sell. Maybe they're just not open to negotiating as well, or taking a price that, a buyer's looking to now renegotiate negotiate down because they feel like, well, I should be getting a better value because I'm still a serious buyer in this market. Yes, there are buyers and sellers still selling, but it's becoming a little bit more difficult. You got to have a savvy agent. You can't have some of these beginners that are out there, and you definitely have to have a strategy when it comes to, how you are marketing your property with respects to video and virtual tours, but more importantly, how you are getting those videos and virtual tours out to the market, out to the masses, and making sure you're maximizing that exposure. That is a whole science in itself, folks. And if you think that, it's just a simple, easy, like, let's just run an ad and just pick a zip code, it isn't anymore. And I'd be happy and more than happy to deliver, a strategy-oriented video as well, so that we can cover exactly what it takes to maximize that impression when you're hitting not only the open market, but also the social media platforms that everyone finds themselves on this day and age, especially right now. Now, investors and buyers, as I mentioned, are facing a plummeted stock market. I already told you that, money is not there anymore. So that is obviously leading to these cancellations and money being pulled out and developments being canceled and investors moving their money elsewhere so that they can get more stable in the short term and then come back, for the long term, because again, this is a temporary situation. Now, what's going to happen with renters and tenants? Well, it's not all about what's going on with homeowners, and buyers and sellers. What's going on with our tenants in California as well. Landlords officially cannot evict tenants right now. Now, that's great. That's a good thing because obviously a lot of people are unemployed. How are they going to pay their rent? But here's another point to consider. Going to be probably some friction going on with the landlords and tenants, especially when improvements come into play. Now, especially for Los Angeles, and I know about the rest of the county or say the rest of California, but I know personally because my mom and dad happen to own a couple multifamily properties, but one of the properties in particular fell under a new mandate by the city of LA where it had to be retrofitted for its parking. And that involved, probably an $80,000 to $90,000 bill, which a lot of people have until the end of this year to complete. So with the coronavirus and people unemployed, this is going to be an interesting time for tenants and landlords alike, getting along together. I really feel like communication is going to be key so that all sides understand and are all on the same wavelength moving forward so that there's no confusion. We're already stressed out with frustration. And landlords, if you're listening to this as well, this is a good time to get ahead of the game and reach out to your tenants and just be ahead and just let them know that, we're all in this together. And if there are improvements that need to be made, that they'll be figured out some way or one way or another. Moving forward, as I said, Q2 is going to be the worst decline, and that's per CAR, the California Association of Realtors. And I mentioned earlier as well that this will be high single digits. There will be a 0% mortgage going into effect pretty soon. And if you haven't heard all the details about it yet, be wary of it. It seems a little too good to be true. So just again, be cautious. Make sure that you're speaking with a lender who you feel confident that really understands this current situation and what is involved with the loan and lending process during this current situation as well. A lot of lenders don't have products that can work right now. So make sure, again, also, even when you're under contract, that you're leaving your loan contingency open so that there's any changes at all with the interest rates or being able to get a program or a product. If any changes happen whatsoever, you're not going to be in a position where it's going to impact anything in the deal. And maybe you can get an extension so that, both you and the seller are on the same page moving forward. Sellers are going to be wary of what's going on. They have to be. There's just no other way around it right now. However, with respects to this potential 0% mortgage going into effect, basically the inner workings of it are basically suggesting that, anything that's a 4-unit or under, and that includes single family homes, their payments basically can be deferred for up to 120 days. And what do you basically have to share with the government in order to, or with your mortgage broker in order to take advantage of this opportunity? Well, you just have to tell them that you're being impacted. That's it. You don't have to show documentation whatsoever. You just have to simply say that you're impacted. And guess what? If that 120 days comes up to term and you're in a position where you're feeling impacted still, you can simply go through that process again and add an additional 120 days. Bear in mind though, this sounds fine and dandy and great, but remember, you are going to pay it at some time. So whether you get the forbearance now or later or not at all, keep in mind where your money is going and how it's being spent, because the mortgage just doesn't disappear. Again, this is a temporary thing that we're all experiencing experiencing. And it's great that we're having some alleviation, openness to understanding what everyone's going through, but be smart. Things are going to go back to normal pretty interestingly, not quick, but interestingly is the key word, and there's no predictability to it whatsoever. So what they roll out in order to make sure that normalcy goes forward, we have no clue. So just be prepared. Predictions. Let's hear the good, bad, and the ugly. Well, bad and ugly basically run together right at this point. The likelihood of foreclosures is not going to be tremendous in LA. There may be some people who are impacted because of the stock market. I know that there are people that live off of dividends, especially with respects to being retired, and they're using those dividends to either pay the mortgage or just maintain their standard of living as well at the same time. So that's something that is a negative possibility for a lot of people as well. Deferred payments, I'm not really sure how that's gonna pan out. I'm a little quasi nervous about that. Could it lead to foreclosures? It's a possibility. Once you start getting behind in those payments, they start adding up. I don't know how the interest rate's gonna change or how that whole program really is gonna work, because it just seems too ridiculously easy to just say, hey, you know what, I'm impacted. Give me my free abatement of 120 days. I'd be cautious. Again, it's gonna be interesting how that all pans out. And again, I don't have a clear answer, and no one does at this point in time. As I mentioned before too, will this all recover in the next 6 to 12 months? Probably not. This is going to take some time. Everyone who's going to be interested in getting back into the market, when normalcy starts becoming evident again, with businesses maybe starting to open up. Fortunately enough, real estate agents have become an essential service in California, so that's great. Can't show any property yet, can't do any listing appointments, can't show open houses or do anything of that nature yet, but that's a great thing to have that put into effect so that these services can still be provided, because people are buying, selling, renting, moving, relocating all the time, whether there is a virus or not. However, again, there's a lot of hesitation, a lot of speculation, totally understandable, and sellers themselves are asking themselves if they can afford to sell at the current price, or at the current price that will have an impact in this next quarter as well. Sellers may not be in a position where they want to sell anymore if they're not getting what they anticipated, say, from last year's markets. Buyers will find themselves in a similar situation. They basically have to assess if they're going to be comfortable handling the down payment, handling the monthly mortgage payment, and then obviously incurring those property taxes. Now, don't forget the unforeseen improvements that occur with a property as well. If you're a homeowner, things break all the time. Be fully aware before you take that jump in, and also be aware of your closing costs too, because that's a cost that a lot of people do not foresee at the end of a deal, and that can be some big money. We're talking some thousands. So sometimes it's always a benefit to you as a buyer and to you as a seller to have a conversation with your agent and just say, hey, is there any way that the escrow officer can give me a little leeway or a better deal on the rate? And same thing goes for the title. Don't be hesitant to ask for it, especially in this time. People want to do business, people want to work with you, and they're willing to negotiate their terms as well to get the deal done. Investors as well, they're not looking to jump into the market until things start either getting stabilized or to the point where they recoup their money. Again, a lot of investors are pulling money from outside sources, and these outside sources are getting their money from being filled in with the stock market. So if the stock market dries up, which we're kind of experiencing right now with these really falling numbers, investors are not going to have the investor money to do these developments that we're seeing throughout Los Angeles, California right now, especially on the west side. So that's going to be interesting. Again, there are going to be some that are continuing to move forward. There's some bigger builders out there that are, say, for example, Thomas James Capital. Don't foresee them slowing down. They're just a machine. They have the capital behind them, and they realize that this is a temporary market at the same time. Unemployment is going to be an issue. We're going to have to find a way to get through that. The stimulus package is there for them, as well as unemployment. But again, if these numbers continue to creep up, as we're hearing, to the point where it can 10 times that 3.3 million applicants we already have to 30 million, and almost 1/3 of our working population, boy, it's going to be an interesting rebound time to normal. I'll tell you that right now. Also, here's another interesting thing. Smaller brick and mortar brokerages. We're talking like Rex Realty. And more importantly, we're talking about Compass right now. Talk about that brokerage right now. We already saw them drop 15% of their staff. This is hitting everyone. This is real. This is no joke. We're going to have to see who's a player at the end of the day. Keep in mind, things are a-changing. Now, do we have some good coming to us at least? That real estate agents in California are now deemed essential service providers. So that's a great thing. That is a step in the right direction so that we can still continue doing our job for you if you're still looking to buy, sell, or rent or invest. Also, remember, as an agent, I'm completely dialed into our neighborhood. I live in Mar Vista. I'm a West Sider. Obviously, Mar Vista is right between Venice, Santa Monica, and Brentwood. So I can completely keep you dialed in with whatever you are experiencing. If you got questions, thoughts, or what you're feeling, please, again, comment below. I love your support. This is everything to me. It's not easy to get up in front front of you right now. I'm actually doing this at the end of the day after I've babysat my kids for about 8 hours straight. But you know what? I'm dedicated to you. This is what I want to do, and I want you to understand that I'm here for you. So please, 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 I would love your support. Please subscribe, drop a comment below. On that note, let's keep going further into this. Now, obviously, it's too early to say what's going to happen in the housing market. I mean, Q2 is really going to be showing us the true impact of what coronavirus is doing to our real estate markets. And not only in, say, the higher end, but the middle and low as well. Everyone is going to be impacted no matter where they fall on the spectrum. There will be some opportunities. There'll be buyers on the other end. There'll be fire sales for investors. In terms of general buying and selling, though, we're not going to see the traditional way of buying and selling right now. And we'll just have to wait and see what's going to happen. There's no certainty. There's no answer. But to stay informed is everything, and that's how we get closer and closer to the answer. Now, the stimulus bill, again, I think it's going to help the economy, but I'm a little nervous of its repercussions as well. As I already mentioned with unemployment, the speculation of going, almost a third unemployment with applicants, it's a frightening time. Super curious to know your thoughts and feelings. Please comment below. I'm sorry that I couldn't paint the prettiest picture tonight. I really wish I could. The next few weeks are going to be a really tall tale of what's going to happen. Again, keep it dialed in here because I'm going to bring it to you. Good, bad, or ugly, I'm going to bring it to you because you deserve to be informed. Keep it locked in. Until the next video, have a great one, and we'll talk soon.